NBFC Ecofy, backed by Eversource Capital, has raised over 380 crore rupees in fresh equity from global impact investors, including British International Investment and FinFund, doubling down on a model that finances everything from electric vehicles to rooftop solar for households and small businesses. In 3 years, the company has built a 1,400 crore rupee loan book, serving over 1.2 lakh customers, signaling strong demand for climate-linked financing at the grassroots. Joining me now to talk about the road ahead at Ecofy is its co-founder and COO Govind Sankaranarayanan. Govind, welcome to Startup Street. You've raised over 380 crore rupees from global DFIs like BII and FinFund, long-term impact-focused investors. So tell us, what does this vote of confidence say about the maturity of India's retail green finance market? And are we at an inflection point for green finance in India or still in the early innings?
So, Shruti, thank you for having me on the show. It's clearly a mature market. We know that we have over 1 million two-wheelers, several 100,000 three-wheelers, more than 10 lakh residential rooftop solar installations and so on, which are there. We have significant investments that have been made by companies like TVS and Hero and Ather and Tata Power and so on, both across different segments. So I think that it's fair to say that the green market is actually not just here to stay, but where the future is.
You know, Ecofy is positioning itself as a retail-first green NBFC. Govind, what's fundamentally different about underwriting a solar rooftop customer versus a traditional retail borrower?
Well, there are some differences. Firstly, solar rooftop customers don't sort of congregate together in a dealership in the same way that people do when they're buying a car, for instance. So you find that you need to have a distinct customer journey, which enables people to sort of be, the dealer particularly, to be able to finance and service the customer. We've created precisely such a customer journey. Secondly, we have been able to actually, with the consent of the customer, access their electricity bill directly from the DISCOM and assess how much of solar power they actually need, and then fund them in accordance with that. There are also a couple of other nuances. The funding is done in 2 tranches because solar installations don't sort of happen overnight. So all of that has really helped us to be actually the leading sort of residential player in the space.
Sure. Govind, you've built a 100% retail loan book. Why take that call in a sector where many lenders still lean heavily on corporate exposure? And what gives Ecofy the edge in a space that could soon see banks, fintechs and NBFCs all chasing the same green customer?
Retail is really where the funding need is.
Okay.
These are new asset classes. These new asset classes require, they usually cost a little bit more. So naturally, customers need financing. And that's therefore where a new NBFC ought to start out. Secondly, thanks to the India Stack, it's possible to use technology actually to reach out to these customers. And I think that's something that Ecofy has done fairly well over the last 3 years. So that's really why I think we think retail is where we would start. There are also a number of unique products that we offer. For instance, we have been able to sort of disaggregate the funding of the chassis from the battery for two-wheelers and for three-wheelers. That's not something too many people do. We also, have fairly deep relationships with some of the manufacturers who therefore offer us special subventions, which we can pass on to the customers. All of that is, makes us different.
Okay, Govind, currently with 1.2 lakh customers and 1,400 crore rupees AUM in just 3 years, you're now targeting a 3x scale up. What are the key levers? And also, if you could take us through your current revenue growth numbers.
Well, we have way to go in order to grow. There are new markets we need to tap into. Our wallet share in some of these major OEMs still can grow. For instance, with Ather, we've just signed up a arrangement relatively recently with Bajaj, TVS, etc. There's a lot more that we can do on two-wheeler space. The SME business that we actually are planning to expand is an area that we hope to sort of grow into over the next couple of years. So these are all areas that we would look at. The revenue currently, if you look at both interest as well as fees and so on, is around 200 crores a year. We think that is going to grow at least 4 to 5x, close to 1,000 crores in the next 3 years.
All right, so 1,000 crores in the next 3 years. Govind, you're sitting on an approximate 50% capital adequacy ratio post fundraise. How do you balance aggressive growth with disciplined risk management? And as RBI tightens norms for NBFCs, how are you future-proofing your model while scaling fast? Also, if you could quickly tell us, beyond EVs and rooftop solar, what's the next frontier that you're looking at?
Risk management is obviously critical in any NBFC. We need to have as many diversified sources of funding. We've been fortunate to get funding from a number of development financial institutions and others. Obviously, we use AI and machine learning in order to identify early warning signals within our portfolio. We're fortunate to have both great investors as well as a strong board. So they kind of make sure that the company sort of sticks to the straight and narrow. We have a fairly diversified portfolio, and importantly, the portfolio is granular. So all of these are ways in which we manage risk.
Okay.
To your question about, where else?
Yes.
As I said, green is going to be mainstream. 5 or 7 years from now, I think many asset classes in SME, in vehicles, in homes, etc., will all basically be green and sustainable in some form or fashion. And I think over a period of time, we will move to expand to all of those asset classes.
Yes. All right, Govind, on that note, it's time for me to wrap up our conversation. Many thanks for joining us on Startup Street today, and wish you the very best for all your growth plans.
Thank you, Shruti.